Almost every central bank today, they own gold. From the United States to China and Russia, there's a global understanding that gold is true money and it is the ultimate store of value. And for the last decade, central banks, they've been buying gold like no tomorrow. They don't care if the price is $1,000 or $2,000 an ounce. They know the ultimate value of fiat currency is trash. And just in Q3 alone, central banks, they bought 400 tons worth of gold, the highest amount over the last 12 years. But there's one bank that's defying this trend, and that is the Bank of Canada. In fact, they have no gold reserves today, and I believe that is a horrible mistake. If we take a look at Canada's foreign reserves, we can see they hold everything under the sun except gold. They have over $77 billion worth of securities and deposits. Plus, if you throw in the special drawing rights from the IMF, they have over 100 billion reserves. But they have zero gold on their books, not a single ounce. You probably have more gold than the Bank of Canada. It's really startling to see a global central bank that is all in with paper instruments that's totally shunned hard assets, especially precious metals. And we need to talk about this because Canada might be exposing itself to a lot of tail risks as we approach the end of the currency life cycle. And here's the funny thing. You would actually think that Canada would have more reverence, more respect for commodities, especially gold. After all, they are the fourth largest producer of gold in the world, mining almost 200 tons a year, just slightly behind Russia and Australia. It is a $14 billion industry and they export their gold bullion to all parts of the world, right? But they refuse to hold any in their vaults. Now, in this video, we're going to do a deep dive into why Canada has sold off all their gold at the bottom of the market. That is insane. Why it doesn't make sense and why it is definitely a bad idea today. And if we travel back in time, Canada had over 1,000 tons in 1965, but the government has been selling off all their physical gold with the last remnants sold in the early 2000s. And since 2020, we are seeing global money printing like never before, and inflation in Canada is almost 7%. Holding just paper assets isn't the smartest move. And if one day Canada decides to restock their gold bullion, which I believe they will, it will move the markets in a very big way. Now we're going to ask ourselves, what would cause a central bank to liquidate all their gold? And it seems central bankers, they have horrible timing when selling off their gold reserves. We just need to recall Gordon Brown's decision to sell half of Britain's gold reserves at the bottom of the market between 1999 and 2002. The gold price was at an all-time low of $300 an ounce at best. And this was also roughly the same time period that Canada also sold off their gold holdings. And since that time, the price of gold has skyrocketed and gone up by 600%. You can't time a worse trade other than buying Bitcoin at 60 grand a year ago. So why did Canada sell their gold? And according to the former Bank of Canada Governor David Dodge, he gave the most bizarre reason why they decided to offload their holdings. It's really a Twilight Zone reason that you won't believe. And according to him, it's quite clear that it costs to hold gold, whereas holding US or Chinese or Euro bond yields give you a return. And he goes on to say, holding this antique instrument of stability called gold really didn't make any sense. And we need to debunk his statements with the benefit of hindsight because we can objectively determine that the Bank of Canada, they made a horrible mistake liquidating its gold reserves. They are all in with paper assets and fiat instruments that even I'm terrified of just looking at their reserve balance sheet. So let us compare the returns of gold versus bonds, which is most likely what the Bank of Canada bought using the proceeds of the sale. Now the problem with David Dodge's idea of chasing yield is that he's ignoring the reality of inflation and money printing. Yes, gold pays no yield, it pays no dividends, but it holds its value while the returns from paper instruments are eroded by inflation. And let's assume that the Bank of Canada puts the majority of the cash proceeds into US Treasuries, the reserve currency that every country still needs, so there's very little exchange risk here. And let's say they took $1,000 and they placed it in a 10-year US Treasury that was yielding around 4 to 5% in the early 2000s. And let's be generous and give it a 5% yield for 10 years and they hold it to maturity. And then the Bank of Canada rolls that amount and they buy more 10-year treasuries for 3% yield in 2011. So we have an average of 4% yield from US bonds spread out over 20 years. Very simple math. They would have turned their initial $1,000 into almost $2,200 in 20 years. And that looks decent, right? They have more than doubled their money, right? But those returns are nothing compared to just sitting on their gold. If the central bank just held their gold, they would have experienced an incredible gain from $300 an ounce to almost $1,800 today. That's almost a 6 times gain. $1,000 invested in gold would return around 6 grand over the same time period. So selling gold for bonds was not a good financial decision. It doesn't matter if they bought Chinese, American, or European bonds, they can't keep up with inflation, and especially today when currencies they are all crashing against the dollar. And this is the problem with holding paper assets, especially bonds. Right now, rates are rising, causing bond values to fall, and that means central banks have no choice but to hold their bonds or treasuries until maturity, or if they do sell, they'll take a haircut. But if they just hold it to maturity, the interest payments still won't catch up with inflation. A yield of 3.7% in treasuries is nothing when inflation is easily double that at around 8%. Holding bonds open you up to both inflation and interest rate risk, and the world is beginning to see this. David Dodge, he believes that the international monetary system is robust, but I think he's forgetting about how leveraged the entire financial system is and how bond values can crash. Even the Federal Reserve is sitting on tens of billions of losses as Jerome Powell continues to hike rates, and this is happening globally. However, we need to understand why Canada was bold enough to dump all its gold. And according to the economist Martin Morenblit, he believes that Canada has tied their fates with the United States. He mentions how the Canadian dollar is a satellite currency to the United States, and Canada can always rely on the US for financial aid if they run into a liquidity crisis. And what Martin's referring to is the US dollar swap lines between Canada and the Federal Reserve. So let's say Canada runs into a dollar shortage. They don't need to sell any gold in the open market. They can just tap into their currency swap line with the Federal Reserve. Let's change Canadian dollars plus a fee for US dollars. And yes, it does solve the immediate liquidity problem, and the swap line is very big at around $30 billion if I'm not wrong. Canada can then use these dollars to import commodities, food, oil, and products from the world. Not really oil, I mean they're one of the biggest producers of oil, but the main issue here is a complete reliance on the Federal Reserve and US monetary policies. Basically, the Bank of Canada has swapped away gold, which has zero counterparty risk, for the help and assistance of the United States, a single country, one country. And this opens up a lot of questions. What if one day relations break down? What if the dollar goes through a currency crisis because of money printing or debt default? And what other stores of value does Canada have if an extreme scenario happens? Now, all these are valid questions, and this is the blind spot that Canada has, and they might want to remember that we live in a brave new world where Murphy's Law is in effect, right? Anything that can go wrong will go wrong. And that's why holding gold is so important, and the majority of central banks, they do it. Its usefulness comes from its simplicity. You hold it, you own it, and there's no counterparty risk attached to it. It can't be printed from thin air or debased away. But knowing all this, why doesn't Canada buy more gold? And this is where we need to speculate a little bit. It should be obvious to everyone that Canada and the United States, they are best friends. In fact, Canada supplies 61% of America's crude oil imports, so there is a symbiotic relationship between the two countries. And if Canada was to buy gold, the US might see it as a slap to the face. Remember, gold is priced in US dollars. So when you buy gold, you are selling away the dollar and longing gold. You're telling the world that you rather hold a yellow piece of metal than a reserve currency or US treasuries, right? And that's a geopolitical problem. Canada is America's largest trading partner, ahead of China even. And if they start dumping dollars for gold, that isn't a good sign for their relationship. So in a sense, Canada might be stuck. They can't buy tons of gold today without raising eyebrows and causing the price to spike up. But I believe they will eventually have to make a move back into gold if inflation continues to stay elevated and if bond prices continues to crash. The Bank of Canada will be forced to sit on these assets until maturity and suffer the full effects of inflation. We can already see them starting to lose money for the first time ever thanks to rising rates. Now, if Canada decides to stockpile gold, they can easily do it. We can see key regions of the country all producing gold, especially in Quebec and Ontario. In fact, Canada still has 2,200 tons of gold sitting below ground that they can easily mine. And this is gold that they can dig out, refine, and stockpile as reserves rather easily. Plus, they have the Royal Canadian Mint, which can refine gold and turn it into big bars they can store in the central bank. So Canada has everything they need to build their gold reserves without even importing from overseas, right? And this is why it's truly bizarre that a bank issued a statement saying gold bullion is not considered as liquid as, for example, US Treasury securities, and to the extent that physical delivery may be involved, could entail significant costs for secure transport and storage. and it seems they value convenience much more than having a store of value without counterparty risk. And it doesn't make sense to worry about storage and delivery costs when they already have the facilities and infrastructure to make it happen. And in the grand scheme of things, this could be a classic case of penny wise, pound foolish. But while Canada isn't buying gold, the rest of the world is stocking up. We have eastern countries including China and India stockpiling gold like never before. And even the United States isn't crazy enough to sell their 8,100 tons of gold on the open market. They know that holding the world's largest stockpile of gold gives credibility to both their economy and the US dollar. Remember, it was the backing of gold during the Bretton Woods Agreement in 1944 that helped propel the dollar as the reserve currency. If all faith is lost in the dollar, the US at the very least has a huge stockpile of gold to restore some confidence, not all, but at least some confidence in the system. If we look down the list of countries with the most gold in their vaults, we can see the most developed countries in the world all holding enormous stockpiles, and that can go from 5% to over 20% of their FX reserves. We have NATO members like Germany, Italy, and France having thousands of tons, and Asian countries like China and India and Turkey also holding generous amounts of gold. The precious metals has so many advantages that it just makes sense to put some money there. It holds no political or counterparty risk, it is a tier 1 asset, it is sanction proof, and apart from bonds, it is very liquid. Every country in the world will gladly swap their currency for your physical gold. And that's why it's very bizarre that the Bank of Canada thinks so little of gold. And if I was a central banker, I see two big risks that are looming on the horizon, right? We have to realize that inflation has gotten out of control, and coming back down to 2% might not happen for the next 2, 5, or even 10 years. And how are fiat currencies going to fare then? And you might be getting yield on your bonds, but if the real interest rate is still negative, your reserves are still down in purchasing power. And the second risk is not being prepared if there's a global monetary reset. Gold could come back as money. And what if the world does split into two different monetary systems? And what if eastern countries like China decides to experiment with a gold-backed currency? Canada won't have any physical gold to bolster confidence in the Canadian dollar. And if the United States, the holder of the reserve currency, is wise enough to hold on to their physical gold, perhaps Canada should follow suit. Because if a revaluation or monetary reset happens and gold is involved, the Bank of Canada might be forced to buy gold at double or even triple the prices today. Now, maybe I am wrong, but I think the key to investing is to buy an asset when it is low and undervalued and not selling it at the bottom of the market. And for you and I, this is just further evidence that gold is still not being taken seriously enough around the world. Just ask yourself, guys, when was the last time you heard conversations about people talking about gold other than this channel and others like it, right? Now, I can tell you that most of the discussions I hear around me are about stocks and bonds and to a lesser extent, real estate. Gold isn't even on people's radar and mainstream media isn't talking about it. But what we are seeing are signs that fiat currencies, they are in trouble. There's been too much money printing going on. Gold is flowing from the west to the east, and we are in a global currency crisis. So hang tight, guys, and let's remember the bigger picture when it comes to stacking gold. If Canada does a U-turn and starts accumulating gold again, we could see another gold rush happen, and other central banks, they might follow suit and stack even more. But it still boggles my mind that a country so blessed with natural resources believing more in paper assets than commodities. But let me know what you think. Did Canada make a good move by selling off their gold reserves? Will Canada restock their vaults with gold once again? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these inflationary times.